My name is Nancy Schlepp, and I work for Sandfire America. We're permitting the copper mine in White Sulphur Springs, and I grew up in the metropolis of Ringling, Montana. So, in agriculture land, we ranch there, and I'm very happy to introduce, because that's my background, business and economics, Dr. Doug Young, who received his PhD in economics from the University of Wisconsin and joined the MSU faculty in 1977. He retired in 2010 and is now lecturing and writing extensively on Montana state and local taxes and spending. And his writing appears in academic journals such as National Tax Journal and Public Finance, as well as local outlets including the Montana Business Quarterly and Montana Policy Review. He is a member of the 2002 Governor's Income Tax Advisory Council and served on the Department of Revenue's Tax Reform Review. He advised the 2005 Montana Legislature on school financing and teacher salaries in relation to recruitment and retention, and is currently a member of the Revenue Interim Committee, HJ 35, that you heard of earlier. And I asked Doug if there was anything specific he wanted me to say today, and he wanted you all to know that no student has ever fallen asleep during one of his lectures. We are getting late in the afternoon today, and so that is your challenge, is for everyone to stay awake. I think there will be no problem, as Doug always has great information to share, so please welcome Dr. Young.
I have a very good point of view up here too. I can see what's going on. So thank you, Nancy. Is this thing there? It works. And thank you to Bob and Pam and the Taxpayers Association for inviting me to be here. And when we're in this season of thankfulness, I realize that every one of you out there has a reason to be thankful today as well. This is the third academic economist to speak to you today. Well, how'd that go? Okay, here we go. So this title of my talk is an overview of Montana taxes, and the idea is that we all know taxes can be a very controversial subject, and sometimes facts are picked from here and there. And so this is an attempt to make a pass-through on what are the data, what are the facts about Montana's tax system, how does it compare with other states, a little bit about how it's changed over time. And then the end, I sneak in a few opinions about where it might go in the future here. So let me start with, there's a little bit of overlap here with what Dick Barrett did. I think the criteria are in a little bit different order. But before we get to numbers, we can think a little bit about what is it that constitutes a quote-unquote good tax system. And the first one actually on my list was the last one on Dick's list, but it's also the one we were just hearing about in the last session. And that's the one of promoting economic opportunity for people in Montana. And for decades, I think we're hearing it's changing now, but for decades we've seen young people leaving the state. And they're leaving the state for better opportunities elsewhere. So to the extent that the tax system can help out on promoting economic opportunity within the state, or at least not discourage it, that's a desirable feature of a tax system. Second criteria is fairness. This one is really tough. What do you think is most people's idea of a fair tax? The one that someone else pays. That's the one, and of course that accounts for the popularity of taxes on tourists. And indeed, fairness is a difficult thing. Dick referred to horizontal equity and vertical equity and so forth. This has something to do with, most people think taxes should have something to do with ability to pay. But beyond that, it's a little bit difficult to pin down. Even though it's difficult to pin down, this is important. It's a terrifically important aspect of a tax system. The third item on my list is low administrative and compliance costs. All of us around April 15th were we're well aware that the costs of complying with the income tax system far exceed the money that we send into the government. There's all the things to get your tax return in order. I ate lunch with somebody from Texas that files a property tax statement for the Department of Revenue here, and their submission is 10,500 pages. So I decided I shouldn't feel sorry for my tax return anymore, for the difficulty in providing them. Let's see, stability. Again, we had a reference earlier today to the 2017 special session. Revenue projections came in lower than expected. The legislature was back in session 6 months after they left. They were not expecting to come back for 21 months. And then of course, they made adjustments and cut spending and moved money around and eventually balanced the budget. Similar things arose after the 2001 recession and the dot-com bust, dot-com stock bust. Capital gains revenues were way down. The 2008-9 recession, income tax revenues way down. And stable revenues make it easier to manage the public finances. Or to put it the other way, unstable revenues make it much more difficult to manage the public finances. The last criterion on my list here is adequacy. And of course, really, revenue is the only good thing about taxes, is that the government services that are provided, the schools, the roads, the infrastructure, the healthcare for that matter. If we didn't have to worry about the spending side of the budget, of course, then we wouldn't have to worry about taxes at all, and then we could just go home. But now we have to have 2 more talks before we get to the bar. So, okay, here. So let's get to total taxes here. I'm going to start out with total state and local taxes in Montana. And what I mean by total taxes is property taxes, whether they're levied on residential, commercial, agricultural, industrial, any other kind of property. Income taxes, corporate and individual income taxes. Sales, all kinds of excise and general sales taxes, so we're going to compare with other states. And severance and other kinds of natural resource taxes. And when I talk about total taxes, whether they're levied by the state or they're levied by the county or the municipality, if you live one of those places, the school district, right down to, in principle, mosquito control districts. So the idea here, this first cut of the numbers that we're looking at, we're trying to look at all of the taxes that are levied in Montana, state and local taxes. So the first question is, are Montana's taxes high? And the answer is, well, not really. On the left-hand side, we have dollars per person. This is for 2016, the latest data available at the time of preparation here. And Montana's total taxes per person were $3,800, and that ranked us 37th in the nation. And the national average is, as you can see there, almost $5,000. Idaho's a bit lower, North Dakota much higher, South Dakota actually higher than us, and then, just a little bit higher than us. And then Wyoming, quite a bit higher than the national average, but not nearly as high as North Dakota. Another way of looking at them is as a percentage of income. And that's attractive for a couple of reasons. One, as I mentioned, is income as a measure of ability to pay. And we're not a high income state in Montana. We're, I think, about 88% of the national average. And so we have a little bit lower ability to pay. But also, income is really a driver of the demand for public services. So we get more income, people like the roads to be smoother, like their schools to be better, their football teams to be better, and everything else along the way. So when we look at it as a percentage of income, well, in Montana, all these taxes taken together amount to 8.7% of personal income. And the U.S. average there at the bottom is 9.9. Our ranking changes just a little bit. It's 38. Idaho is very similar. North Dakota higher, Wyoming higher, South Dakota lower. And of course, when you're looking at those high states there, North Dakota and Wyoming, that's influenced by what they're taking in terms of natural resource revenues. Another question is, are taxes rising in Montana? So these are the same total tax figures, and they go all the way back to 1970, again expressed as a percentage of income. And the answer is no, taxes are not rising. In fact, they're rising more slowly than income is rising. Of course, they rose in nominal terms, just the number of dollars, that went up a lot, but income actually went up faster here. So back in the 1970s and the first half of the 1980s, total taxes in Montana averaged 10.9% of personal income. You can see the drop off after the middle 80s. And then most recently here, 2011 to 2016, the average was 9.1% of income. When we look at that, you got to be careful, because most Montanans, this isn't what they see, or this isn't what they have seen happening over time, because a lot of this decline that you see right here is not in the taxes that people pay directly, it's the decline in natural resource revenues. So here's a chart of the aforementioned natural resource tax revenues. This goes from 1980 up to whatever the Department of Revenue gave me, 2018 probably there, it looks like. And there's two lines there. The gold line is the nominal, just current dollar revenues. This is, it's on a per person basis or per capita basis. And then the gold line is not adjusted for inflation. The green line is what an economist calls real. It's adjusted for inflation. It's in constant 2018 dollars. And you can see that Montana benefited tremendously from natural resources, especially back there in the first half of the 1980s. It amounted to almost $700 per person in those days. And that was about the amount that a typical state generated in its general sales tax. That was about average for a general sales tax back in the early 1980s. But then with the end of the energy crisis, how many of us remember when the price of oil fell by 50% in 3 weeks in 1986, and what happened to oil and gas and coal in those days? You can see what happened to those revenues. There was a partial resurgence around 2008. Remember, oil approached $150 a barrel on some markets. But again, they've tapered off. And so those resource revenues are much diminished from what they were back in the early 80s. This slide describes the composition of taxes in Montana in comparison with a typical state. As you can see, Montana gets 40% of its tax revenues from the property tax, while a typical state gets only 31%. So people say Montana relies too much on the property tax. This is typically what they're talking about, we're asking the property tax to pick up 40% of our taxes, and that is more than a typical state that runs about 31%. Montana doesn't have a general sales tax, but it levies a whole variety of selective sales or excise taxes. Sometimes these are called sin taxes. And the big sins in in Montana are apparently alcohol, tobacco, gambling, and motel rooms. I gotta laugh. All right. This is good. Okay, right. Okay, very good. Actually, I love the joke, but the reality is that we have taxes on public utilities, we have taxes on life insurance policies that are huge revenue generators in comparison with some of the sins, but they're not as funny. So still, when you take if you take all together all these selective sales and excise taxes, sorry, I forgot my number here. I missed my number here. Oh yeah, if we take our selective sales taxes, we are actually the 18th highest in the country as a percentage of income. So we do have very substantial selective sales or excise taxes here. But still, as the second set of bars indicate here, when you combine them with a general sales tax, of which we have 0, then we get about less than half as much revenue, less than half the share of tax revenue coming from sales taxes as compared with a typical state that gets about 35% of its tax revenue. Moving on to the next slide, income taxes. These are corporate and individual income taxes. In Montana, that they account for 33% of the taxes. The typical state gets 27%, so we're a little bit on the high side there. Finally, on the far right is the other category, which includes motor vehicle taxes, and also that's where severance taxes get hidden in the U.S. Census Bureau's classification of the taxes. So Montana, we don't get as much natural resource revenue as we used to, but we certainly still get more natural resource revenues than a typical state does. Okay, whenever I show that last slide about the over-reliance on property taxes, people say to me, I knew my property taxes were too high. Have you ever heard that? Have you ever said that? Oh, wait, okay. But it turns out that when you look at the data, that the average effective tax rates, I'm being very careful with my words, the average effective tax rates on residential property in Montana are not only not high, but they're low in comparison with much of the nation. So let's get a couple of things in there. Average, everybody knows about property taxes. They depend on the value of your house or your property. They depend on where you live, exactly. What is your school district? What is your county? What is your municipality? What special districts are there? So the mill levies vary from place to place. So when I'm talking average, I'm talking average. The other point is this notion of an effective tax rate. This is something you can calculate in your head, or actually we used to be able to calculate them in our heads, but then we got these things. Now we can't do anything in our heads anymore. But here's what you do is you take your property tax bill and you divide it by the market value of your property. Not what the taxman necessarily says it's worth, not what you think it's worth, but what it would sell for in an arm's length transaction between a willing and informed buyer and seller. And you can probably do that. Let's see, I do that in my head, and I live in Bozeman, of course, which actually has relatively low mill levies, but I do that calculation in my head and I get 0.7%. That's my property tax bill. And that's actually what some of these data say. Sorry, I forgot to describe these two sets of data. The data from the Tax Foundation are based on a statewide sample. And so they are perhaps representative of the state. You might question them because it's, they ask the people, how much are your property taxes and how much is your house worth? That's data of questionable reliability, quite frankly. But anyway, what you get is an answer of an average in Montana of 0.7%, and the U.S. average is 1.05%. Again, the people from Texas, where are you people? You confess to all kinds of things down there. Texas, their property taxes are 3%. Their effective rate is 3% of market value. The other set is from the other set of data on the right-hand side are from the Minnesota Center for Fiscal Excellence. In this case, what they're doing is they're making a calculation based on the property taxes that exist in the largest city in each state. And so in this case, of course, that's Billings for Montana, and they're comparing it with these other cities. So it's less representative of the state as a whole. Bob and I have had discussions. Billings also has lower mill rates than, say, the other AA communities in the state. But still, if you look at the numbers, you get the same answer here, that the effective property tax rate on residential property is lower than national averages, and in fact, it's lower than several of the adjoining states as well. We good there? Okay, so we've demolished that myth. What about industrial property taxes? This chart shows two different sets of industrial properties. One of them is a very small property consisting of $100,000 of real estate, so land and buildings. And the other property is large, certainly by Montana standards, $25 million of real estate. And then it's assumed, for the purposes of this exercise, that each of these properties has business equipment, it has furniture and fixtures, it has inventories. Some of those things are taxable in some states at various rates. And then the calculation being done here is what is the effective property tax rate? Again, take the total tax bill when you get all done, divide it by either 100,000 or divide it by 25 million. This data from the Minnesota Center suggests that in Billings, the effective rate on that small property is about 0.5%, even lower than the residential rate. But look in contrast with the $25 million property where it's 1.25%. So quite a difference there. Also look at the 0.5% for the Montana property and compare it with the US average of 1.2%. So Montana well below average in terms of the small property, but for the large industrial property, we're much closer to the national average, and we're higher than all of the other contiguous states here. Okay, too many facts? I hope not. Okay, another concern that people have is even if I convince them, which I probably won't, that their property tax bill is not high compared with if they lived in Texas or in Pennsylvania or in many other states. They say, yeah, but it's going up. It's going up. And my income's not going up. So they're concerned not just with the level of property taxes, but the changes over time, the rise in property taxes. So I got a couple slides here that talk about property taxes in Montana over 24 years. The first slide here is just total numbers. We see that back in 1995, our total property taxes, all kinds of property, were $704 million, and 241 of that was levied against residential property. So are property taxes rising? Well, by 2019, that 704 million had become 1.5 billion, in other words, a doubling. And the residential property taxes, they hadn't just doubled, they'd increased fourfold. Okay, so what's going on here? Well, first off, 19 years, there's no adjustment for population, no adjustment for income, no adjustment here. This is nominal data. This is the kind that if my students present me with this, then I yell at them. So please don't yell at me. Okay, so now here's the same data expressed as a percentage of income. Here's the same data presented as a percentage of personal income. And you can see that personal income in Montana actually grew faster than total property taxes over this, what are we working with here? Over this period, 24-year period. So back in 1995, total property taxes amounted to 4.5% of personal income. By 2019, they had declined to 3.9% of personal income. But look at the green box. Look at residential. Residential property taxes increased from 1.5% of personal income to 2% of personal income. Hey, maybe those people have something that they are correct in complaining about. Yeah? This is property taxes, residential property taxes, rising faster than income by a factor of 1/3. It's significant, is what I would say. But it also creates a little bit of a puzzle here. Why is it that the residential property taxes grew so much faster than the total property taxes? Well, it turns out that it's not terribly complicated, the answer to this question. You know, the property taxes are based, at least in principle and to a considerable extent in reality, on the market values of property. It's the market value of the property. And look what happened to the market value of residential property in Montana over this same 24-year period. It increased from, what do we got there? 16, these are dollars, millions, so these must be billions. $16 billion to $100 billion. This is a six-fold increase in the value of residential property, market value of residential property in Montana over this 24-year period. But commercial property, it only kind of quadruples, less than quadruple. And then for all the other property out there in the state, all the other 13 classifications of property, the increase was only a doubling. So when you look at that, no wonder the property taxes coming from residential property rose faster. But let me say it another way here. Another way to say it here is that of the total increase in the market value of property in Montana, 76% of that increase was residential property. And commercial and all the other 14 classifications of it, only 24% of the increase was these other kinds of property. You with me? So in that sense, it is not really surprising that property taxes coming from residential property were increasing faster than total property taxes. You good? Good on that? Okay. Let's take a look at income taxes for a minute here. Let's see, I probably have a lot of time. Okay, let's take a look at individual income taxes for just a moment. This is another chart like the first number one we got. If we look at individual income taxes in Montana, again 2016 data, they amount to about $1,100 per person in Montana. National average $1,164. Idaho is lower, North Dakota is lower, and of course South Dakota and Wyoming don't have individual or corporate income taxes at all. When we look at them as a percentage of income, the picture changes a little bit. The individual income taxes are 2.6% of, again, personal income in Montana, compared with the U.S. average of 2.3. So we actually are a little bit high in terms of our income tax relative to the national average. And in fact, we rank 16th highest among the states by that measure. Idaho, North Dakota, of course, are considerably lower here. A couple other things about the income tax. Many of you know there are many, let's see, sorry, our top marginal tax rate is 6.9%. That's kind of a touch point for some people. I can remember when I started doing these talks more than 20 years ago. Where were we? Bob Story knows. We were at 11%. And we might have been number one, or we were very close to number one in the country. And that's not true anymore. We're 6.9%. But still, we are I think it's the 13th highest. We have the 13th highest top marginal tax rate among the states. Let's see, one other thing is Montana's income tax has a large number of modifications, deductions, credits, and of course what those do is erode the revenue. Mostly what those do are subtractions, not additions, that erode the revenue. Some states, many states, just use federal adjusted gross income and they say we don't need to make any modifications. And other states even use, a few states actually just use federal taxable income. Lower compliance costs, that's for sure. Okay, so, okay, that's all I got on the income tax here for the moment. So how does all this add up for a business in Montana? What does that look like? When you think about, we have corporate and individual income taxes, and our income tax is a little bit above average. We have property tax that we rely much more heavily on the property tax, and for some businesses it's pretty high. We don't have a sales tax, but we've got these excise taxes. And actually, the Tax Foundation has created an index of state business tax climate. And when you take all those things together and actually add in the unemployment insurance tax, the Tax Foundation concludes that Montana has the 5th best tax climate for business in the country. Okay. This is my last data slide. You still awake out there? Still awake? Okay. This is the last data slide. This is direct taxes on families. These are all different ways of looking at the taxes, right? So these are direct taxes on families. This is a study. They take actually hypothetical households of 3 people. One household has $25,000 in income. One has $150,000 in income. And then they calculate what is their income tax liability, what are they going to end up paying in sales taxes, property taxes, and auto taxes, based on, what are the home values and what kind of a home would a person with a $25,000 income be living in, and what would be the mill rates, and so forth and so on. And so when you take all those direct taxes together and look first at the low income family of $25,000, turns out that the estimate here is that that person would pay 7.5% of their income in taxes. And that's actually one of the lowest in the country. We rank 47th. You see the national average down there is 10.6%. Why is that? You can see the other states there as well. We're all below average, but Montana in particular is very low average. Well, one reason that we are so low is that we don't have a sales tax. In a typical state, a household with this $25,000 in income would end up paying about $1,000 a year in sales taxes. And in Montana, we don't have that. And so they don't have that tax. Now look across the sheet and look at the income level of $150,000. And in Montana, the tax rate rises when we take all these things together to 8.8%. We remain well below the national average, 9.8%. And we rank 37th, somewhat higher than before. And you can see the variations across the other states here. Which are the states that have the lowest tax burden on the higher income group? Well, Wyoming and South Dakota don't have an income tax. So that's what's going on there. And then North Dakota is, because of the Bakken, they've generally been able to hold down their taxes in many dimensions, is what I would say. One more thing to look at on this slide is, look at when you go from the $25,000 income level to $150,000. In Montana, for example, the tax rate goes from 7.5% to 8.8%. So it increases. That's saying that the taxes people are paying is increasing as a percentage of income. So that's what's called a progressive income tax. Progressive does not mean necessarily good or necessarily bad. It's just a definition. When the average tax rate is rising, that is called a progressive tax rate. But that's actually really quite exceptional, and you can just see from these other states over here. Idaho also has a progressive system, but for the other states, what happens is the average tax rate goes down as income rises. So that's what's called a regressive system. So this is part of when we think about the fairness of the tax system, what are we looking for in terms of the tax system? Do we want that average tax rate to be rising, going down, be constant? That's a matter of judgment, is what I would say. Okay, so I proposed these criteria in the beginning and they overlap with Dick's, so hopefully we won't be too far off here. Let's think about, now that we have these objective data about what the tax system looks like in Montana, to what extent does our tax system promote economic opportunity? What can we say about that? We can say that the overall tax burden is below average. We can say that the Tax Foundation thinks that we have the 5th best climate for business in the states. Those are pluses. Part of that is that, again, that we don't have a sales tax. But of course, all these indices, they can vary from business to business. Some businesses, the absence of a sales tax is important. Other businesses, it's not really important. But overall, and also I should say here, our property taxes on large industrial enterprises look pretty high. But overall, it looks pretty good for the business tax climate. Fairness. Again, this is a tough one. This is the one having to do with what happens to the tax burden as you go to different income levels. Montana at the moment has one of the most progressive tax systems in the country because most other states have regressive tax systems. And a lot of that does have to do with the fact that we don't have a sales tax. But I want to give you one counterexample, and that is Minnesota. So Minnesota, anybody from Minnesota? Do we have any Minnesota taxpayers? Oh, good. Nobody contradicted me. Minnesota has an income tax. Minnesota has a sales tax. Minnesota has a property tax. And Minnesota's tax burden on low-income people is less than the burden in Montana. Wait, I said that they have a sales tax. And I talked about how sales taxes tend to fall heavily on low-income people. So how do they do that? In Minnesota, they have the Minnesota Family Dividend, if I got the name right. I'm not quite sure about that. This is a refundable income tax credit. So, yes, they have a sales tax. Yes, the sales tax hits low-income people hard, but that's just one part of the tax system. They also have an income tax that has a refundable income tax credit. So they end up having one of the most progressive tax systems in the country because of their treatment of low-income people. Okay, low administrative and compliance costs. You know, that's kind of a mixed bag. I mean, not having a sales tax means we don't have those administrative and compliance costs. On the other hand, we look at our property tax system, and when I learned that somebody had to submit a form that was 10,500 pages long, I was shocked, but I guess that's the reality. That's what's going on out there. But even in terms of our income tax, we got lots of little dealy whoppers in our income tax. A lot of things there. Let's see. What was our next one? Is stability. You know, the way that tax systems, the different taxes are generally ranked in terms of stability is the most stable one is property tax. The second most is sales tax. And then you have income tax. And really, for Montana, then, of course, also resource taxes are important as well. And I put resource taxes down there kind of like with income taxes. In terms of, there's really two problems for us in terms of resource taxes. One is the short-term fluctuations of volatility. The other one is that we're on a path like this. The 1980s aren't here anymore, and that's more of a secular thing. But so what does Montana have here? We rely actually extra heavily on a relatively stable source, the property tax. But then past that, we also rely relatively heavily on income and resource taxes, which tend to be unstable. And then finally, adequacy. And this is really a tough one. This is basically, if you want to see more government or less government, or what are you seeing there in terms of these things? But as I said in the beginning, the whole reason that we have a tax system, as painful as it is not to have these meetings. And it's not to employ accountants, provide jobs for accountants. But rather, you know, we have this tax system because of the government services that get paid for this way. So it's a matter of balancing out. We want to create skilled, productive, hardworking workforce and a community and an environment that people want to live and work in. And so it's a balancing act there. What is the role in terms of government services? Okay, so are there any hints here about tax reform? Well, suppose one wanted to do property tax relief. And suppose that so many people wanted to some extent say those natural resource revenues are gone and we need to replace at least a part of it. And suppose one thought that infrastructure needs work and what's it called, behavioral health. I'm not sure what to talk about here. Education, obviously the universities need money. Let's see here. But, you know, if we're going to give significant property tax relief and we're going to replace resource revenues and do something on some of these other dimensions that are on the spending side, then Montana needs more revenue. Maybe I didn't have to go through all those things. If we're going to do those things, then Montana needs more revenue. And the income tax is one place, and we could certainly mess around with the rate structure, and we could do something that actually I think would be great in terms of simplification of the income tax system, but it's doubtful that we're going to generate big numbers, big dollars. So I'd say that some kind of a sales tax is, again, under discussion, and we heard that just a little while ago in connection with HB 35. So the proposals here range from a local option sales tax to tourist taxes, more tourist taxes, to a general sales tax. If you're going to do something significant in the top part of this page, you probably need the general sales tax. Doing that general sales tax by itself would greatly increase the regressivity of Montana's tax system. It does fall harder on the low-income households. But that can be dealt with through a refundable income tax credit. That said, that means you need even more revenue in order to accomplish that. Okay, I had one last comment, and that was, of course, sales taxes have been talked about for a long time in Montana. Before I came, Governor Tim Babcock got behind a sales tax in the 1970s, went to the voters. What happened? The very popular Mark Roscoe was behind a referendum to the public in the 1990s. What happened? 3-1. 3-1. So is the sales tax coming around this time? We'll have to wait and see. Okay, I'm done. You got any questions? Sorry, one more comment here. Sorry, one more comment is, of course, you can email me. You can get the biannual report for the Department of Revenue, but also this handy little flyer that the Taxpayers Association is handing out is a summary of much of the information that I talked about today. So those are out. Pam's got those out at the front desk if you don't have one yet. Okay, yes?
We had a House bill that eliminated property tax
Eliminated.
and replaced it with sales tax.
Uh-huh.
Is that sustainable to long?
Let's see. We have one state in the nation that, every state in the nation has a property tax. They rely on it to various degrees. We have one state in the nation that has only a property tax. New Hampshire, I'm talking about. No sales tax, no income tax. Although that's not quite true because they do have income tax on some kinds of income, but basically they don't have a general income tax the way we do. I think you'd have trouble with the revenue adequacy side of it. It's going to depend. How high is your sales tax? 25%?
Our Constitution lets us do it.
Yeah, I've seen that 4%. I saw an estimate floating around from somebody's tax bill, and 4% was going to raise $800 million a year. Is that the one? I'm looking for confirmation from somebody smarter than me. 800 million. Our property tax is, what did I say the total property tax was last year? It was almost 2 billion, right? So I see it replacing with that 4% sales tax, and that's taxing a lot of business transactions as well. And I see that replacing 40% of the property tax.
All right, we have time for one more question.
I have a question. On your increase in residential taxes, is there any way we break out to see how much that is new construction over that amount? Because feeling taxable would change that number.
Yeah, okay, the question was, can we break out new construction from increases in value? And the answer is that I cannot do that. And Dick Barrett, who conveniently left, has actually tried very hard to do that. And maybe the Department of Revenue, no, Gene Walborn says, no, they can't do it either. Definitely, I meant to point that out. When I was talking about that six-fold increase in the value in the market value of real estate, that is both appreciation and new construction. So we got Big Sky in there and so forth.
We can generally tell you how many new houses are built, but there's more in new construction than just new houses.
Yep. Thank you very much.